Ladies and gentlemen of the crypto space, we're live on a Friday, December 13th at 11:30 a.m. I was off this week. I was doing a little bit of work during the week, but we're back in the saddle, back in action. And there's a whole lot of interesting things going on, including some macroeconomic things. So, actually, let's go over what we'll talk about today. I wanted to mention um, I wanted to mention obviously Velodrome because Velodrome absolutely went parabolic this morning on the Binance listing. And I wanted to talk about liabilities and I wanted to hit on what Mr. Spread just posted. Mr. Spread, um, excellent observation. And this is generally something that's very important because people talk about net liquidity, Fed balance sheet minus reverse repo minus Treasury General account, and you look at whether there's a liquidity crisis and interest rate spreads, especially like high yield spreads, and you're able to see if there's available capital. And then you got obviously Mike Howell's inspection of net liquidity, and even Mike Howell's talking about everything rolling over from a net liquidity perspective. But there's lots of buts. So let's start out with Velodrome. And it's a significant retrace thus far from where the hell it blew off to at about 42 cents. But we'll see where it settles. So there's a couple of levels on the chart, and this is a daily chart because I don't have patience for no short-term, low time frame bullshit charts that'll drive you nuts. So this is where we're at, or this is where I'm at. I don't think necessarily the top level holds, and I don't think we're even close to being in a position for all-time high to hold. But this looks like a retrace, at least to the second level. Maybe I'm wrong. It's irrelevant. You know why it's irrelevant, ladies and gentlemen, because we got these positions at a discount of when we were much lower in price because we bought discounted NFTs. So it's irrelevant. That story is irrelevant from an acquisition standpoint. But clearly, all the folks on Binance, they're longing the shit out of it. And they're buying at these premium prices. And that's not something I'm going to partake in. You buy at a discount. And now we get the exit liquidity. So people are buying at a premium. They are the exit liquidity. And that's the way these cycles work. So maybe the top level holds. If it doesn't, you retrace it, low 20s. Whoopie do, it's all good. This is just an inspection, something we watch unfold. This chart tells a story of people chasing something that they should have bought at a significantly lower price. So it's a story of people overpaying for shit, and that's all over the place. I mean, you're literally talking about the Bitcoin chart. People are overpaying for this thing. Like it's mad. How do you tell if someone's overpaying for something? Zoom out to a moving average. All right, maybe not the 3 month on Bitcoin, but let's look at the 100 SMA on the monthly. The average price for Bitcoin from a monthly perspective, 100-month trend of price is 24,000. So people are overpaying like shit, crazy for the Bitcoin. That's just what one this chart means. Two, it just also makes sense. Everyone's in a frenzy. Supply and demand imbalance. There's not enough supply. So people are overpaying for this shit. So doesn't mean they can't and won't keep overpaying for it. That's another story. That's why you look at a little bit shorter duration. And then you get your mean regressions every couple of years. 22 was not just a mean regression to the weekly 200, it was a deviation, an aberration to the downside. So it overshot significantly to the downside, putting in relatively decent inverse head and shoulders in hindsight in 22. Breakout, support, support, and now the fresh higher high, which has come literally over the last like 2 months after a massive, how many month consolidation at the highs. So the statement there is people are paying premiums left and right. There's nothing left to buy, and we said probably how long ago we were done, and we did a little bit of a stretch. The stretch was to acquire the discounted VE NFTs maybe over the last couple months, and maybe the Tango, whether that whether that narrative holds well or not is another story. The product looks great, um, but great tech isn't always the best investment. We got to see what the seed investors do, and obviously see the significant volatility, and the seed investors on a breakout are taking advantage of that opportunity to dump because you literally launched from Fjord Foundry at 4 cents. So literally at 8 cents, nobody is selling a micro cap and not less than 10 mil market cap for 100% gains. What the fuck? So this is clearly seed investors that got at point 0.4 cents and they're operating on a 10x gains or 20x gains. Um, which is not surprising. Seed investors are often JEETs, and they will dump for capital gains, and is what it is. It's the name of the game. Just got to be careful of those fuckers. Um, Chart still looks good. Breakout, retest of previous resistance, flip support, and that's exactly what this inflection line is here at about 8.4 cents. So I have my eyes on this. I have it liquid. I don't trust the seed investors. I don't trust first cycle shit anymore. I'm not going to go in. I'm certainly not running into locking anything in a bull market. You don't lock shit in a bull market. That's literally just a rule of thumb. Obviously, that rule of thumb comes after a great deal of experience. But even though this is brand new asset and it could indicate this is a relatively low price, I'm still gonna side with caution. That you just don't lock shit in a bull market. It just is what it is. Either you got the discounts, and it's already locked quite some time ago, or whatever. Then it's just cap gains, and you got to figure that shit out and all the tax implications of that, which is really annoying. Um, Dollar liabilities, and then we'll talk macro for a minute. So, it's not just a thought on like DeFi money or a thought on CRVUSD. It's USDS, DAI, um, MIM to a degree, but you really need that variable interest rate. So maybe Fraxland, but no, but Fraxland isn't creating liabilities, and Frax itself is a different type of liabilities as compared to the long tail assets and DeFi money, or the core LS the liquid staking products that CRV accepts as collateral. And that was another interesting post by DeFi Money talking how long tail and the increasingly volatile assets work well on the L2s because cheap transactions, and you could rebalance the LPs, you could arbitrage much more cost effectively, and you could liquidate because it's cheap transaction fees, and even in a high volatility environment, which you can't necessarily do the same on mainnet because it's relatively expensive. So that's an interesting consideration there. But what's pertinent with regard to a liability is if someone is creating a liability, you understand, these are called liabilities. If you if you go to Mint and Optimism and you deposit WETH, boring WETH. So if you deposit and you print a money, the money token, which is a dollar stablecoin, that's called a liability. You just need to accept and understand these terminologies. If you deposit ETH on CRVUSD and you borrow, you know, uh, $500, you are borrowing, and that is creating a liability. Take the definition. You're minting a stable coin, but it's an actual liability. So someone owes something to someone. And as a result, the ETH collateral is posted, meaning it's vulnerable. So what does that mean? If you have a chance to buy a liability that is required for someone with collateral to protect their collateral, you buy the damn liability. These are the best stable coins I've ever seen. These are maybe the best dollars I've ever seen because this is the most interesting collateral. I mean, obviously things get lost in translation in TradFi like in traditional banking because you know it's just much larger and there's some like a Chase dollar is the same price as a Citibank dollar is the same price as an HSBC dollar, which is complete bullshit. And that is something that drives me nuts because where's the arbitrage or where's the cost? There's no cost of capital expressed in the value of that dollar. It's just fixed. It's hard coded to a dollar. What kind of stupid shit is that? The value of a dollar is relative. It's dependent on basically the cost of capital associated with its continued existence. But what does that mean? If you have a chance to buy a liability against collateral and that collateral can be threatened because of volatility, then at some point either the system may threaten to liquidate that collateral, which is called a margin call, and in Curve USD you get your deliquidation process and you get your bans. Same thing with DeFi down money, you get your bans. Um, that implies the collateral owner or the protocol will buy back those liabilities at a premium at some point in the future. And that's a big deal. That means there's always a demand, if not now, but in the future, for the liabilities that you bought, which makes it a great freaking dollar. Because in worst case, there's demand for the liability. And that's everything, especially with a dollar product. This is basically guaranteed demand. It means there's guaranteed value. Demand equals value. So I find that fascinating. I did that in a post shortly ago. Uh, what did I write here? Yeah, let me explain the simple mechanic. If somebody prints a liability against collateral, then spends that liability, if you have a chance to buy that liability to earn an interest rate paid by the cost of that capital, which is SCRV and S money, you buy the damn liability because the debtor will always come back for their precious collateral and will have to buy the liabilities back at a premium. It's a great liability to own. It's exactly the liability you want to own. And it gets lost in the complexity and regulatory bullshit of traditional finance and the banks, bank deposits. No, these are a different type of liabilities. These liabilities, CRVUSD and money, just actually are better expressive of a liability than freaking bank deposits. You can't make this shit up. You really can't. Anyway, all right. So that was my 2 cents on the thought of dollar liabilities and frankly the best money. Um, you know, you need to threaten the collateral to um, to force people to purchase a currency. What does that mean? Okay, so if your interest rates are 15% and they skyrocket to 50%, you're threatening the collateral, which is going to force that person with the collateral posted to buy back currency. Okay, so that's why interest rates increase the price of a currency. So if CRVUSD interest rates shot up to 75%, there's going to be a big bid. People are going to be trying to buy CRVUSD because they don't want to pay 75%, or they're in liquidation and they don't want to get liquidated. So they're doing everything they can to buy the damn currency to avoid liquidation to protect their collateral. It's a very simple mechanic. I mean, the same thing is going to play out with liquidity, except it won't be variable interest rates. It'll be variable redemptions. So instead of varying your interest or monitoring your interest rates, you've got to monitor your threat of redemption. How you, I believe there's an order of redemptions, and obviously depending on market pricing, where your collateral fits in the order of redemptions, you're going to have to adjust your parameters. So it's basically the same thing. Whether you're varying the interest rate or varying the redemption, you're still threatening the collateral and forcing people to purchase a currency. Um, that's interesting. Liquidity should be an interesting product. Now, here's the only rub on liquidity is that it doesn't exist yet. It falls in the category of spec revenue, um, and that's fine. What's pertinent in that regard is just the sizing of the position. If exposure is desired, I have opted to not have exposure. Ironically, I wish I had more exposure to Aave. The irony was I originally bought it for just to get a discount on Go, and it was a very small position. It's no longer a very small position. It's not a huge position, but it's kind of like it's up 400%. So if you buy 5 grand worth of something that's up 400%, you got a 20 chip. It's not nothing. So I think that thing just keeps going. I mean, Aave is such a core component of these crypto markets. But don't be that guy. Meaning, this shit's at a massive, massive premium. I mean, look at the weekly. It's the weekly 100 is at 100 freaking premium. So don't be that guy buying at a premium. Now, bear in mind, crypto's weird like that. You haven't even broken all time high. So they break all time high and it goes to 6 grand and it crashes to 300 during bear market bottoms. Because that's what crypto's known for. That's the Bitcoin pattern. You go freaking 20x on the money and then you crash 90% just below previous all time highs. That's literally what Bitcoin does or has done cyclically over the years. Anyhow, this is that bag that we all should have listened to the condom on crypto condom and have larger exposure. But listen, Aave becomes what I speculated to become. I think my tiny position is going to be very nice. It's not going to be tiny. And then obviously, plenty of folks with larger exposure are going to be sitting on 9 figures. And that's fine. You don't have to win with everything. But if there's a 9 figure and you got upper sixes and sevens off of 5 chip, come on. So Aave's cool. That's a big deal. Curve back down to 114, flirting with those 120s, up at 122 last night, flirting with the 200 EMA on the weekly. I mean, when this thing goes, as Credible Crypto was on with the Llama guys this morning. When this thing goes, it's going to go. It's just relatively low liquidity. It's just it's either 50% locked or it's just not highly liquid like it used to be back here in 2020. That was a uh, very different liquidity situation as compared to now. So at the price it is now, at a buck 19, a very different liquidity situation compared to January of 21. Oh dear, relatively liquid in comparison. I let's talk about what Mr. Spread was hitting on. So Fed led liquidity, um, looking at interest rate spreads to see if something's blowing out. What's my take on all this? My take is about short and midterm. Short is like a quarter, midterm is a half a year, let's say. Those are the time horizons my mind tends to work in. So let's say, we're expecting liquidity to roll over, and that's basically what my college data indicates as well. And that's what an uninversion of the yield curve indicates, where liquidity rolls over and we have some sort of recession. Okay, why else would we have declining liquidity? Me, look at bonds or cash money because of the interest rate on short duration debt is paying more than the expected returns of the stock market. So what happens in that scenario if you get paid 5% on your money market and the expected returns for the some shit average stocks is like 3%, you get a better deal. And capital flows from underperformance to outperformance. So this is how the setup plays out for a big capital rotation from equities to literally cash or outside the country to maybe another country that has more favorable conditions and outperforming equity market or crypto market that's just absolutely insanely bullish. But I don't think we get that kind of macro rotation in the crypto just yet. But there's another part of the story aside from cash being paying more than equity returns, and it's the total money supply, the composition of money supply. And I think Mike Howell would probably agree with a lot of the sentiment here. Like midterm, the liquidity rolls over in 25. You don't know when. That's what his data shows. So let's say towards the end of 2025, liquidity rolls over, maybe recession conditions associated with uninversion of the yield curve and deficit spending for the federal government blows out and just things get weird. And because there's a big bid and a rotation from equity market gains into US debt, interest rates actually come down. So this is exactly what I'm expecting. I'm expecting what TradFi folks commonly call a blow off top. And this is what we see with DeFi. This is what we saw in 2021. This is what we saw with increasing bullshit with ICOs back in 17. But now I better understand the mechanics of how it plays out. So everything rolls over at some point. They can't have complete control, and then they intervene in order to stabilize things. But what happens before everything rolls over? An inversion of the yield curve, interest rates come down significantly, collateral prices appreciating, for instance, 10-year. Concerning that it's up 1% today, I would love to see the move come down and it start now, but fine, let it happen in January. But you get your bond price, your treasuries appreciating, which means the interest rates come down, which is bad long term, but short term, your collateral is going up in price and your volatility is collapsing. That's the global Ave health factor condition I've been talking about forever at this point. So if your global Ave health factor goes from a 1 to a 5 or a 1 to a 10, that's game on for your global capital expansion season. Okay? So next up is that. Next up is the whole system just goes apeshit on dollar supply. So midterm, the overall liquidity composition should contract, but first, move collapses 60 to 80 Q1 2025 lower, 60 to 50 to 80 1H 2025 first half. Interest rates come down to upper fours, 3.5 to 4. So collateral appreciation, volatility collapses, and there you go. There goes the global money supply expansion, the end stage of the cycle, and then liquidity conditions roll over. Something blows up, and something dries up, and basically end of 25. Mike Howell's inspection of global economic conditions plays out. So that's how my observations and understanding of the mechanics of economics folds into the larger story that other people talk about. And there's plenty of wild cards like what the hell happens with the deficit? Does it go higher? I mean, it's probably going to go higher as interest rates come down. So maybe there's a great deal of compensation of deficient liquidity conditions, unlike historically. So what does that mean? All of that, and this is probably where I'm heading with the way I see things, is we have a softer bear situation for crypto markets this time around, or DeFi markets, because DeFi markets only existed in 20 and 21. There was nothing before 2019. So I expect higher lows, higher highs over what time horizon? Check back in 2028, 2032. 4-year cycles. Simple. Higher lows, higher highs. I expect, I mean, come on, we literally, January 20th, the entire administration coming in, pro crypto. I mean, what the fuck? I expect higher lows. I expect some strange shit to play out with the equity markets because I mean, there's a lot of shit in the equity markets, and maybe maybe even the administration thinks it's overinflated. It's just such stupid pricing. Like, what's the point of it being at these prices? It's not like these companies that are at these massive prices need the capital investments. The whole point of the stock market was to invest in companies, to sell stock, to raise capital, capital raise. So right now, the stock market's stupid. It doesn't do anything that it's supposed to do. So, could be in for a reckoning, a rotation of capital from underperformance to outperformance. And that's what like Druckenmiller talks about the lost decade of equities doing absolutely shit because they turned into boomer meme coins. Equities are literally boomer meme coins. That's it. They don't do anything. Stupid investments. Anywho, I'd love to see on the weekly a punch right through, hit 150, call it a day, pit stop at 250, and this chart would look lovely. IMDC. Hey, Cap. Always a pleasure. Arrow, good morning. The great VE33 repricing is upon us, apparently. Apparently, it's still up 90%. I mean, it looks like it's holding on to that top level. We'll see what happens. This is a daily candle. It was a hell of a candle. I mean, a lot of things, VE33 land are doing well. Ramsey's up 42%, Nile up 42%. That's nice to see. Cow swap has been killing it. 702, 701 fully diluted value. Hell of an FDV. Thana retracing a bit. Revenues on Thana actually pretty interesting. What like what did I buy? I think I bought 10 grand worth of Thana that went to like 150 grand, and now it's collapsed a bit. But of a 10 grand position, I produced 350 bucks last week. Uh, 10 grand, thousand, it's like 12 grand, 14 grand a year, give or take. It's like 14 grand a year. Um, it's over 100% APR plus the principal appreciation. That's just crazy. That's just crazy what these crypto markets do that nobody understands. And that's exactly why the wife this morning is expressive of what um, so many people are, uh, the sentiment of so many people. She's looking at 15 years of her 401k and it's like barely doubled. And it's a standard 401k, diversified. 401ks are cookie cutter. You select the shit like a checkbox, and it's barely doubled. And you wake up to Velodrome at double the pricing, cranking out 30 to 50% APR paid weekly. And she's basically like, motherfucker, this fucking guy. Because she would have never seen it. She says that quite often. She would have never seen these things. Certainly never understood it, would have never understood these types of investments. So we have interesting conversations along those lines. We did do that stream one time where the captain's wife was asking the captain some shit, and it was productive. I think I would love to do more content like that. She asked me many questions often that would probably be useful for the community. I'm curious as to why SCR Nuri are pumping given on-chain metrics don't look any better because everything's pumping. It's bull season. Outperformance and people are like, they got to find something that hasn't pumped yet. And then they bid it and it pumps because everyone else is like, oh shit, it's pumping. It's just a hot ball of money rotating. So that's it. Um, it's hard. So that's why the hardest part of a bull market is not buying. It's like everything's going up, but you can't buy at a premium. That's the rule. That's my rule. And if you choose for it to be your rule as well, everyone who's on 102 people, a little light today on a Friday, then that's cool. But that's my rule. I This is exit liquidity season. I had the discounts. I sat here with you guys in 23 and 24 with these fucking prices that went down, down, and down, and we bought. It went down more because we bought a little early, but it finally turned around in Q4 24 this year. Now it's up. So why would I buy when it's up? We bought when it was down, and now everything is higher. Everything that we bought in 23 and 24 is at a higher price now. Simple as that. So we bought the discounts. And now we stack the bag and we do what Warren Buffett does, sit on a fat bag of cash. While at the end of 2025, Mike Howell's prophecy comes in, net liquidity rolls over, term premium comes down significantly, bond market, yields collapse, prices go up, stock market demonetizes into bonds and maybe a little bit of crypto. And and you're sitting on a fat bag of cash waiting for everyone to dump everything because they don't know how these cycles are actually working. And because you stack the cash during the bull market, now you could buy your discounts. Oh, just that's maybe the rule is don't buy at the wrong time. You got to buy at the right time. And what's the right time? When shit's cheap. Shit is not cheap right now. Good morning. Much a pleasure. The advisors in the house. Otango claims expire in January. Eventually, sell pressure will taper. Yes, if that. You can look through the docs. If that is the seed round, folks. Okay, that's cool. I mean, I want this to be hot. Um, I want this to be hot. I want it to stay above this line. Stays above this line. That's very nice to see. I mean, who the fuck is selling their? Literally, it's a 10 mil market cap, and these people, what a fucking bunch of shitty investors. What a I don't think. You know who's not selling? The Spartan's not selling. I don't think he's Degen anymore. I think he's just Spartan, and he's got a strong hand. Who the fuck's selling a 10 mil market cap? Certainly not Coinbase. All right, what do I know? Maybe it is. I mean, if you're selling a 10 mil market cap, why do you invest? What the fuck? Stupid. Anyhow, Trevor, curious how you're tracking trust transactions and any day-to-day transactions for things like maintenance and support of miners. Yeah, QuickBooks. So my accountant had nice categories. So the primary categories are like, and it's also dependent on the structure of your trust. It's a great conversation that so few people ask about. It really is unfortunate that most more people don't optimize the way they manage their capital. Um, and it's not a simple conversation, unfortunately. So, maintenance and support of minors, which is basically food, clothing, medical expenses, uh, schooling, education and training, which is a little different than schooling because if your son or daughter is doing sports, gymnastics, baseball, equipment, subscription fees, you subscribe to ABC freaking Mouse. All of that, all of that is a qualified trust expense. This is all the whole point of a well-structured trust, and this needs to go in the trust documentation. What is the point of the trust? What is the economic purpose? And the most altruistic economic purpose is children. So a well-structured trust has basically IRC 67E1, which is basically full deductibility written all over maintenance and support of minors, qualifying as HEMS expenses. HEMS as a terminology if folks are interested in doing a little research. Health, education, maintenance, and support are quite arguably IRC 67E1 fully deductible. It's not income anyway. I mean, no joke. People, all right, you brought up a topic. I showed you guys this the other day, and I don't think folks get it. They don't get it. They don't fucking get it. I mean, the IRS states this is irs.gov. Let me be very clear on this. Very, very clear that nobody. It's like it's like So you could tell people it's not income and they just don't believe it, but and you could show them too. They just don't believe it. Virtual currencies are property. Just right there. Just sit. One sentence. Virtual currencies are property. 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 So soak it in. Soak it in. The Florida Trust Law. 738 401 4A1. Property received in an entity distribution. You click a claim button. That's not income because it's property. It's literally property. It says it's property. It's not income, it's property. And it's an entity distribution. Why? Because velodrome, it's an entity. It's an entity, not a capital distribution. That gets more complicated. There's other stuff up here. Sir, it's not a capital distribution, but it is a entity distribution. Means a payment or transfer by an entity to a person in the person's capacity as an owner or holder of interest in the entity. Okay? Okay. Entity distribution, property. 4A1, property received in an entity distribution, which is not money. That's it. Not money. Not money. That's basically what the SEC and the CFTC argue. They literally are in court all over the place saying it's not money. They're saying it's a security or a commodity. That is the easiest thing to argue. It is so incredibly easy to argue that crypto's not money. And they explicitly tell you it's property. And Florida tells you it gets allocated to principal. And then the IRS tells you that principal is an income. It's principal or income. And then you got simply uh, 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 a mutual exclusion. If it's principal, it's not income. If it's income, it's not principal. And then there's all I what 0331614 IRS rule 0331614. The fiduciary actually has a capacity to just say fuck it, it's not income, it's principal. It's literally just discretionary. So what I did with my business is make rules because discretion is attackable. You could attack discretion. You can't attack rules because the rules are there for the economic purpose. So it's quite defensible. So basically, mutual exclusion. If it's not income, it's principal. There's no income tax from a trust level for uh, entity distributions of non-monetary property. It's just it is just unambiguous. It's just refer and to the point where after 70 pages of documentation, one of the strongest or two of the strongest things in this entire 70-page document is right up here. It's just non-monetary property accounting. It's a definition. So you have all this stuff like IRC 67E, and then you have Section 13, which is an entire statutory analysis of just basically like was it 641 and 643, two very key IRC codes, which I look at the CFR, Code of Federal Regulations more so, but Section 13, like the CFR evaluation, is pretty intense stuff, but it's almost irrelevant. Like I did all this work on Florida statute, IRS rules, CFR to come to basically equitable adjustment authority, and it's I should remove that adjustment authority. Yeah, I should actually just remove that. Just the authority to adjust. Folks don't get. I don't. Why? How about? I find myself stupefied after a couple of years. Our Discord should be packed with people that are reading this stuff and writing documents because you go to ChatGPT. How did I write all this? I wrote it all using AI, and you could be your own lawyer nowadays. It's really wild. So, and all of well, let me show you one thing. And I even did like counter arguments and rebuttals, like this is such a powerful document. And I talk about it all the time on Discord. Like it's anyone can access this. Um, so I wrote stuff like this: adjustment authority. Here, this is the power. So down here, this is the powerful argument. Sections 13.15, 13.2, and 13.3 collectively express that allocations pursuant to state statutes proportioning the total return of a trust between income and principal will be respected by the IRS to facilitate the fiduciary in administering the trust or estate impartially. It's all about impartially. It's all about being neutral and reasonable. And then it's like 1366, impartial procedures. You can't make this document up. I put in so much work. And then it's like you go up to here, section two. So I talk a lot about impartiality. So how do you cure partiality? Section two. Yeah, discretion and flexibility in trust administration. I get rid of discretion. I just I don't have time for discretion. My opinion, because you have to argue an opinion. You have to argue discretion. You have to argue a subjective rationale. You're not arguing rules. The rules are the rules. So that's basically what I set up here in 216. And then you go down to like 24, then you go down to 24.1. Section 24.1 is the accounting and reinvestment rules. So this is what you do under what condition. This is literally just the do this a x y z a b c, which has a high level description in section 20. I get a kick out of this section. It's like the fiduciary is required to reinvest receipts to achieve the objectives outlined in 20.11, 20.12, 20.13, and is strictly prohibited from investments as specified in sections 21.4 and 21.5. It's basically very similar. It's like you got to do this, you got to do this, you got to do this, you can't do this. This is important. You got to set limitations. So it's like I cannot do this. I can't do this, and this. And this is a very simple one. 21.4. I may not discretionarily invest outside of core investment criteria, nor discretionarily invest outside the best possible circumstances. The fiduciary is strictly prohibited from investing without respecting strict prudent judgment. And this is my one of my favorite sentences in the entire document. Simply put, the fiduciary is explicitly restricted from investing absent a good investment opportunity. You, I love that. You know why? Don't make shit investments. That's basically what it says. Basically, you're going to invest. It's got to be at a goddamn discount. Check this one out. Section 10. I want to go back to the definition in a second, but section 10. No, no, no. Fuck. I haven't done this in a bit. 14? Is it 14? No, that's deductions. 16. Yeah. Section 16. 16.21. The the corpus focuses on specific cryptocurrency smart contracts that are designed to produce receipt flow while being irrevocably locked. These contracts possess immutable lock functionality, meaning once assets are placed within these contracts, they cannot be altered, revoked, or prematurely accessed. This ensures that the corpus remains intact, aligning with the economic substance doctrine by certifying that the assets are committed to the trust's economic purpose. I mean, literally, chicken and the egg. Did trust law create crypto or the other way around? Because it's like, oh my God, you could lock assets. So talk about eliminating discretion, eliminating it, provably eliminating discretion. Anywho, so let's go back in conclusion, and we'll get back to crypto. Unless folks have any more questions, I'm always happy to talk about this stuff. I love this because all of that whole document, 70 pages, and it's like 1.13. Non-monetary property accounting. Crypto is property, not money. And frankly, according to Florida law, it's not income, it's principal. It's just I showed you the law. So the IRS defines cryptocurrencies, also known as virtual currencies, as property. The IRS notice 201421. There's the notice straight from the IRS website. Florida Statute 738-401A1 explicitly requires the allocation of non-monetary entity distributions involving property to principal. Florida, allocate it to principal, because it also tells you what to do with money. That's why this is crazy. It's like, um, except as otherwise provided, a fiduciary shall allocate to income money received in an entity distribution. It literally says if you receive money in an entity distribution, we talked about the definition of an entity distribution, it needs to go to income. Crypto is not money, it is property. It's like they set the whole thing up. It's like this is it's like they set this up to be built this way. It's not money, it's property. This is literally quote unquote right here. Therefore, it doesn't get allocated to income. And according to Florida, it gets allocated to principal. And according to the IRS, I'll give you this one. State, yeah. Under the proposed regulations, a trust definition of income in conformance with applicable state statutes, literally, here's the state statutes, will be respected for federal tax purposes when state statutes provide for a reasonable apportionment of the total return of the trust. So the whole point is there's other arguments that are less ambiguous here. That it's up to the state. Follow the state rule, and the state rule is right here. I'll get you here. Let's do that one quote that's like nail in the coffin shit. Section 13. Section 13. Um, no, no, here. Uh, yeah, look. So people have questions. So one commentator requested, this is quote unquote. Here, we'll go to the document. So this is straight from the IRS rules. One commentator requested clarification of the requirement of a trustee to make an adjustment that will be respected for federal tax purposes. Let me explain something. Federalregistrar.gov. This is big. This is the CFR. This is the IRS rules. Those requirements are a matter of local law that may differ from state to state. Period. Local law says it's not income, it's principal. Period. Okay, that's it. So what does that mean for folks? I'll end on this if I'm not explicit enough. Non-monetary property allocated to principal is not taxable to the trust in the calendar year received. Only income is taxable. There's a reason they call it income tax. Everyone's afraid of income tax. All right, this isn't fucking income. I think we made that pretty damn clear at this point. Only income is taxable. So taxable income may arise only if, and here's your conditions where taxes arise. And this is only part of the story because you have to talk about expenses, and this is why I mentioned IRC 67E as explicitly number one, part one of IRC 67E. We could actually look at that. IRC 67, no, IRC, here, IRC 67E. Adjusted gross income one. So this is for trusts. The deductions for costs which are paid or incurred in connection with the administration of the estate or trust, which would not have been incurred if the property were not held in the state or trust. Then we get into section 2.7, 2.8, and 2.9 because if you're taxed at 30 to 40% of your money, if this stuff was not held in an estate or trust, you would have significantly less capital and you probably wouldn't be able to afford shit. Because if you got to pay 30, 40% of your quote unquote receipts, couldn't, you wouldn't have been able to incur. You wouldn't have been able to incur these expenses. So that is a very complicated argument, but if anyone's interested in reading it, it's basically a lot. So it's basically 2.7, 2.8, and 2.9. So that's literally like 10 pages to set up that argument down to here. It's literally all of this to set up that argument. Big section. With clear documentation talking about risk and how to manage risk and shit like that. Anyway, did I even answer your question, Trevor? Here's how you're tracking trust transactions. Yeah. Yeah. So it is an overwhelming amount of transactions. So QuickBooks allows you to take a picture of receipts and, oh, QuickBooks has integration with credit cards. So your credit cards automatically do entries in QuickBooks. And then what you're doing in QuickBooks is you're basically categorizing. So you have your $10 at the pizza shop, and it's like you allocate it to minor food, minor beneficiary food, and you attach the receipt, and that's that. So yeah, it's a lot of accounting. Um, so I'm pretty shitty with receipts. I do my best, but I have some arguments in the trust. I'm like, come on, this is I'm doing my best here. This is supposed to take this stuff in good faith. And that's really what was built here, especially given 70-page document. It was built in good faith. So I don't have all my receipts, but I have my categorization. And that's it's important because the categorization um, comes into these. You need a I'm not going to show all my accounting, but you gotta do compliance documentation, like say, okay, this was the amount of so this is here. I'll show one more thing. Uh, So like a 1041, section 24, section 24.3. This is very important. And I get hung up on this because, this is pretty obvious to me. 1041 is supposed to be all income, but if it's principal, it's not income because of mutual exclusion. It's not it's principal. So it's really not meant to be reported on a 1041, but that's what I talk about here in 24.3.1 and 24.3.2. So basically, I say I'm reporting it as gross income because I'm just being transparent, good faith, and I'm deducting it because it's not taxable. So, but I also talk about how it probably shouldn't even be reported on a 1041 as gross income. Um, but it's this treatment reflects the trust commitment to accurately represent the true economic reality of its financial activities, ensuring the substance of these transactions is appropriately reported. Transparency. Is that correct? This treatment reflects the trust commitment to accurately represent the true economic reality. Yes, that's very nicely written. Um, okay, so I don't know. Not, so few people ask me about this shit that when even if someone asks me something, I end up just like going off on a full tangent and digression. So it's a massive amount of work, Trevor. I know. Me and the wife complain about it all the time. If you saw the QuickBooks, it's just entry, 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 entry. It's all day because you're doing work around the house, repairs and maintenance. You got to listen. I mean, and it's really clear cut. Like it's for the kids, so you can't have bad pipes in the house. So that means you got to rip out the whole bathroom and you got to get replace the pipe. So you could just it's deductible because it's IRC 67E1. The kids can't be showering with dirt, corroded 20-year-old pipes. So how do you get to the pipes? And there goes the whole bathroom. So now you're doing the whole bathroom. So it literally you could justify just a massive amount of expenditure. Now, clearly, it's very important for folks to understand food for yourself. Nope. Vacation, spending, car. I mean, technically, the car could be owned by the trust, but I actually don't do that. Good faith type shit. I don't want to abuse it. Trust could owe you money, though. Trust could have debt. How did the trust get capitalized? Did you sell assets to the trust? So maybe the trust owes you capital. Did you sell your home to the trust? So the trust probably owes you fair market value for your property. That's an interesting one. Arm's length arrangements. Like the whole point of the whole very big part of law is arm's length. So it's like, what would the transaction look like if it was involving two people that never knew each other? The home would be sold at fair market value, which basically means go in and Redfin, print out the page. That's the sale price. Okay, so now the trust owes you all that money. It's a debt, so there's no tax obligation. So you literally you just so if you bought your home for like 600 grand and sold it to the trust for 1 million, you sold your primary residence to another entity at fair market value at arm's length because it's literally on redfin.com. This is fair market value. So it's you literally sold your house, but you could still live in it technically. So you should have a rental agreement. That's another one that's complicated, but frankly, if the trust owes you $1 million and you're renting it for 4 grand a month, okay, cool. And if you're managing the trust, probably want a W-2. So you got to set up a W-2, and but you don't have to do that until the trust doesn't owe you any more money. So that's the way this type of thing works. It gets complicated, as you can imagine. But anywho, I just literally digressed the shit out of that one. Hope that helps, Trevor. I wish more people talked about this shit. Um, Prefer RAM over Tango for short term, not locking place at this point. I mean, Tango's microscope. I mean, frankly, RAM is even smaller than Tango. I don't have an answer to that other than I think both are interesting and RAM pays much more consistent cash flow. I'm very content with the cash flow of Ramses lately on basis. Diego, good morning, my friend. Sergio, present. Snoke, all my chips are practically sidelined, but in some sense, I tried to be comfy, just rational patience. I'm here for the long run. Yeah. Um, Getting on the train is the hardest thing people do. Actually taking the investment. It's not easy because once you own them, just up and down, all you give a shit about is higher lows over a multi-year basis. Anyhow, Snoke, I truly appreciate your experience, Captain. I think it's truly helpful for a young guy like me. You're very welcome. It is a pleasure to try and make sense of what is considered nonsense to many. Any advice for my people in my position? Wait for the next cycle or a big retrace? Well, dollar cost average, and you play money or you play the cash, like Bitcoin, dollar cost average. Um, Dollar cost is, yeah, should have some exposure. I mean, don't do big allocations, in my opinion. And this isn't coming from a trader's perspective. This is an accumulation of assets perspective. You should end the year with more assets than you started with. And you could do that by buying on a weekly basis or a monthly basis. The dollar cost average is incredibly important. Holy fuck, I'm in love with the tweet of yours, Captain. All the best to your family. That has a funny one. My wife, because it's the 401k, her 401k didn't do much, and she sees these positions and they've done well. So, eager to take part in your Discord soon. Well, we help as best as we can. We have a couple of new folks in there, younger folks that are trying to figure shit out. Now, I understand obviously it's a relatively technical conversation, including the fact that I just went down a whole rabbit hole of trust, which is even more technical. It's not easy. But I would strongly encourage 100% of everyone and anyone that ever watches me to use Claude or ChatGPT, and you need to start asking questions and never stop asking questions. That's the biggest thing, a piece of advice I could give to young people. Please do that. Much a pleasure, my friend. Is Tango any? Tango is interesting, but guys, this is gotta understand where it fits into a portfolio like mine. This is point zero. This is 0.1% of the portfolio. So 0.1% to 1% changes everything. 0.1% to 10% changes even more. So if you get a winner, not everything's a winner. And depending on portfolio size, you can't do 0.1%. A smaller portfolio, the smaller a portfolio, the more concentrated a portfolio needs to be. And you need to have your big bag, your big bet. It's just all a bet. So do not, please don't buy things because I mention it. Like there's big risk with Ramses, and then there was big risk, frankly, with Belgium. There's big risk until there's not big risk. I mean, look, if you bought Velo at 42 cents on the Binance listing, that's just down at 27 cents. Seriously, this is why you buy things when people aren't looking, when people write things off, when they're dead, the narrative is wrong, and that's the discount. And you don't, when you're buying at a discount, you don't know if it's going to work out or not, unless you talk like I do, and I define a narrative, and I'm not betting whether it's going to work out or not necessarily. It's like I'm betting on, is my narrative reasonable? Is my story rational? And if it is, I have conviction in my purchases. And that's the way my mind works about it. Thoughts on Superchain and Kraken? Massive, massive. I bought the Velodrome position against Aerodrome because the Superchain and Kraken. That's huge. That's like if you're buying Aerodrome, you're buying exposure to base chain, just base. And to me, when I hear that just base, I'm like, done, no interest. You get interest because of the price action, but it's limited exposure. Whereas the super chain, it's endless exposure. Endless. That is a different investment thesis. Hope that helps. Trevor, much a pleasure. Much a pleasure. Joel, can you utilize a recent trust for previous capital gains? No. You're putting capital into the trust um, at you know you know paid in full. You're transferring existing post-tax capital into the trust, so you got to get it in. So if you have previous capital gains, I mean, technically, it's not arm's length. So here's some logic. It's not arm's length if you have $1 million worth of capital gains and you sell it to the trust for 100 grand. Okay, it's argued there's a conflict of interest. So they could collapse the trust and make it taxable to the grantor. Non-grantor trust, that's another conversation. But you could also argue that as fiduciary, it's a requirement to minimize the liability of the trust. So that's not a conflict of interest. In fact, that's a fiduciary obligation. If the trust is acquiring assets and it has an opportunity to acquire them at a discount, which is literally everything we talk about with regard to investing, then it is an obligation to acquire something at a discount that pays cash flow. So, but that requires some strong posturing um, because that's attackable. Um, Food for thought in that regard. But a strong attorney, or even frankly, I would argue people should be trying to be their own attorneys nowadays, and you get advice. Once you're done with your situation, your posturing, your documentation, then you go to an attorney and get an opinion. It's called an opinion letter. And it'll cost thousands, but it's called an opinion letter. And then you're requesting the opinion of an attorney on a topic or a document or questions. a legal opinion letter. And that's valuable. And the more documents you have, the more value you have, the stronger the arguments you can make. So technically, you can do a couple of different things to finagle previous gains, but it's weak and attackable. Um, mm, you said gains and taxable income. No, taxable income. Listen, personal tax obligations are fucked. Basically, meaning you got income, you're getting taxed. They find it, that's not pretty. If you got income tax, you got to pay that. That's like number one. Uh, Capital gains you could offset to a degree, and you could try and finagle, but income, there's nothing you could do whatsoever about income. Um, Nothing you could do whatsoever about income. That's all you got to pay up on, pay the piper on that bad boy. There's no avoiding. So here's the thing. This is the most important thing that folks are quick to jump on when you're talking about trust. There's no avoiding tax. There's following the rules. And that is basically what I showed you guys. Rule, rule, rule. When you follow the rules, it's very different tax outcomes. It's just a different rule set. Personal tax is simple. You pay X amount on capital gains and X amount on income. Corporate tax is more complicated. You maybe have an S corp, which is a pass-through tax entity. You maybe have different things that are deductible, reinvestments and whatnot. And a trust, it might not even be income. It might be principal based on the rule. So this is why for the last 2 years I tried to talk so much about the stuff that I was working on, because when it came time for this market to get hot, you really needed to be in a good position to be prepared. And now is not the time to prepare. Now is the time to sit back. That's kind of what we said like last year. Is now it's time to sit back and it's nothing to do. Just watch. No, you cannot. So be very clear. You cannot erase income, period, whatsoever, ever. Income is income, done. Um, from a personal tax perspective, then you could itemize deductions, but you got to get above and beyond the standard deduction. The standard deduction is a lot for a person or a family. It's like 20 something $1,000 for family, husband and wife file jointly. Capital gains, you're not getting around any of it with personal tax obligations. You can't get around taxes. That's what I'm going to end on that note, because it needs to be very unambiguous. There's no getting around taxes. There's following the rules, and there's three sets of rules: personal, corporate, and trust rules. Hope that helps. I thought a concept president accounted for. Sir, yes, sir. Do you think a cold wall is necessary if you have Bitcoin? Yes. And the fucking shit. Definitely at least a hardware product where the seed phrase has never touched a computer. Absolutely. I'm late today. Good morning, Chads. Much pleasure, Mr. Barada. Salute. Joe D, 50 chip lock position curve for the long haul. Bert earlier this year. I feel bad about it now that you mentioned wrong move and bull run. All I can look forward to are the fees. Okay, listen, it's not, if you bought a 50 chip at like 50 cents, I don't see curve revisiting 50 cents. What's pertinent is if there's a higher low. So for instance, let's zoom out significantly. Brand new asset launched less than 4 years ago. Come on, it's super brand new. All right, so no, wait, this is on a logarithmic chart. Let's turn off logarithmic. Let's fix that. Okay, stop drawing. All right, so I could see decent numbers. I could see, let's say 20. All right, so come on, draw. and then you get just a massive crash, like $5. 50 cents was a damn good entry. That's a 10x on the money. And obviously, you could have capital gains that shit at 30, but that's the whole point. That's why my whole story is contrarian. I'm not here to make the most money possible. To make the most money possible is greedy. What I'm here to do is to have higher lows and print money on a weekly basis because that's how you retire. You retire on cash flow. You don't retire on capital gains because if you're sitting in a bank account, $10 million, you're like, what the fuck do I do with the money? Then you're like, oh, now I have to invest the money. Nobody retires off capital gains. You retire off investments that last a lifetime. You retire off strategic investments that produce cash flow. Because then you're not overwhelmed, like, oh, I'm sitting on too much cash. What do I invest in? That's all capital gains produces is cash. It creates more poison, poison that forces you to have to think about what the hell to buy and what the hell to invest in. It's toxic. So what I care about is a higher low, higher lows, 10x on the money at the bear market bottom. That's what I hope. That's what I want to see. I don't give a fuck that it goes to $30. Okay, so don't worry about. It depends on when you locked it. And if you lock it at $3, hope. I mean, maybe you lock it at $3 and it crashes to 5, but the whole point is that's why it's so hard to get on the train. Because once you get on the train, then it crashed to 6, and that's the bear market bottom. Let's say, and then you get your next cycle when it goes to 90, 100. You bought bear market bottom. The only way to buy bear market bottom is to be in it at bear market bottom. And the only way to be in it at bear market bottom and not get screwed on price point is to have had bought at a discount, a significant discount. Hope that helps. 29-cent position on curve, but rather small. So 29 cents, great price, in my opinion. Hope that helps. JN, hi. Best greetings from Sekatsu. Hey, he sent me here to learn and study. Yeah, me and Sake, we've had some nice conversations lately. Um, well, it's a long road to learn and study, but what more do we have than time? And the only thing I ever want to be in life is different. And therefore, everything and anything that's like people would expect, I don't want to do it. I want to think differently. I want to be different. I want to be that contrarian guy that's like, I don't want to be as wealthy as possible. I don't want to make as much money as possible. I just want cash flow. What's your number? Is it 5 grand a week? Pick your country is obviously relative, but 5 grand a week. Are you good? I would hope so. I know my number. It's higher than 5 grand a week. Not much higher. And obviously, we'll need to adjust for inflation as the situation goes forward. But I want enough capital so that I could dollar cost average Bitcoin, maybe buy another property, invest in real estate. So I need a certain amount of cash flow, but it's cash flow. It's not total net worth. Total net worth is a toxic value that will make you sick and people will get addicted to it. So be careful. Can you advise me on where to start researching about projects like Curve or Velodrome? Any tips on how to get started? What's the optimal allocation to start besides DCA in general? This is a hard question. Gotta understand two things. You gotta understand money. You gotta understand dollars, more importantly. You gotta understand the five businesses of crypto: foreign exchange, credit, derivatives, liquidity financing, and dollar liabilities. Five businesses in crypto. There is nothing else. Nothing else exists as start to finish everything that exists in crypto. So Curve happens to be foreign exchange, dollar liabilities with CRVUSD. Llama Lend is credit and liquidity financing with the gauge votes. So it's literally 4 out of 5 of businesses in crypto. There's no other business like her. Nothing compares. Velodrome is foreign exchange and liquidity financing. There's no credit, no derivatives, I mean, third-party derivatives, liquid lockers and whatnot. Um, Optimal allocation. I don't know. I don't know how to answer questions like that. We is the Bitcoin answer. Everyone gets to buy Bitcoin at the price they deserve. It's the same thing with assets. So, what are the rules of the road? Buy at a discount. Is it at a discount? What's at a discount? Is it at a premium? That you're gonna have to figure out how to answer questions. Those questions. Um, that's not so easy. You want to buy at a discount? XYZ. How much does it cost? How much is it paying? How likely is it to continue paying into the future? I mean, that's always meaningful. XYZ. I'm not going to dwell too much on the question because I hope that I've created some additional questions for you. And when you have more questions, we're here and we'll talk about them. And that's how you begin. That's the advice. Ask the question you just asked. I provided somewhat of an answer, but then you'll have more questions. And then you ask those questions. And please, AI, ChatGPT, Claude, pick your poison, use AI and ask these questions. And whoever's inclined, Discord's been there. I think I'm not going to pursue much of X subscriptions. There's a couple of folks that subscribe, but I'll just put like a coupon code for like a 25% discount because Discord is $10 a week. But Discord's everything. It's a relatively small set of people. It's like 40 something subscribers that remain over the years, but there's endless content in there. I mean, I literally have a trust section where I talked about everything we talked about today, and I'm there to talk. I like talking about shit like that. The Seasick Viking. That was a good one. Yeah, it's a good one. I Not enough folks ask me about like, business structure. I hope it helps. Most people don't think about it until it's too late. They don't think about it until they got a fat tax bill. They're like, shit, what do I do? So proactive is the way to be. Joe D, I meant that's what it is now. I bought 15K at 30 cents. 30 cents. Oh, it's lovely. There you go. Because I believed in it. Also created cash flow thanks to the cap showing us peasants the way. That's lovely. Well, 50K, if it goes to like, if your 50K goes to 1.5 mil at some point, that's nice. Very nice. So, oops, I got 30 cents is a nice price. Okay. Don't worry about it. Don't take what I said. Don't balk during the bull. 30 cents is a nice price. Thanks for the answer. We'll join Discord now and see you there. We're here. I mean, Sake's in there too. Um, Anyone's welcome. Small, tight knit community, but endless content. And I wish more people would ask these types of questions. Like, obviously, Seasick Viking, you like some of the content, and I hope it's helpful. I mean, the beauty of it um, is an answer. There's a lot of good answers that most people don't know. I love these documents. Um, I keep these up because this is like peering through the bullshit. Here's what the IRS says. Here's what Florida says. Here's once again what the IRS says, and that it makes it so unambiguous. It's like these are the rules. You know what the worst rules are? The worst rules are damn personal taxes. It's a horrible rule. You know why it's horrible? You know why they have so much power, by the way? Because it's opt-in. What does that mean? Everyone gets a 1040. The second you literally get a job with an employer, it's a 1040. Therefore, personal tax rules are applicable. This 1099 has different rules, different deductibility. So maybe there's four categories: self-employment, employment, third-party employment, corporate, and trust. There's probably other shit too. But the point is, personal 1040 is the worst. That's where the government makes all their money. where they make almost all their money. It's not even corporate. It's literally just 1040. That's all their income. And ain't that some shit? Anywho, thank you all for joining. 137 people made it to the end of the stream on this Friday, December 13th, 12:51 p.m. I wish you all a wonderful day. You are all now a little bit more rational for having made it to the end of the stream. Enjoy your weekend. I will see you on Monday. Until then, peace.